Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to another enlightening episode of Tax Smarts Unlocked, where we delve into tax strategies that could alleviate the burdensome feelings we often associate with tax season. I'm your host, David Robson, and today we're embarking on an exciting journey beyond the traditional stock market, exploring the tax benefits of alternative investments. So, if the notion of diversifying your portfolio while also reaping tax advantages intrigues you, you're in for a treat. Our conversation is designed to arm you with the knowledge and strategies to not just understand, but strategically leverage alternative investments for both growth and tax efficiency. Let's kick things off with a foundational understanding of what alternative investments are and why they have become an integral part of a diversified investment portfolio. At their core, alternative investments are financial assets that do not fall into the conventional categories like stocks, bonds, or cash. These include real estate, cryptocurrencies, collectibles, art, private equity, and hedge funds, among others. The allure of these investments often lies in their ability to offer higher returns, albeit with higher risk, and importantly, powerful tax benefits. Given the unpredictability of the stock market, diversifying into these alternatives can offer a hedge against volatility, while also opening up avenues for strategic tax planning. One of the key attractions of alternative investments is their potential for tax efficiency. For instance, investments in real estate can offer significant tax advantages through mechanisms such as depreciation, 1031 exchanges, and considerations around rental income. Depreciation, a non-cash deduction, allows you to reduce your taxable income, which can be particularly advantageous for those holding properties that appreciate in value. The 1031 exchange, on the other hand, provides a means to defer capital gains taxes by reinvesting in like-kind properties. These strategies not only enhance cash flow, but also significantly reduce overall tax liability, making real estate a compelling option for savvy investors. Now, let's talk about cryptocurrencies, which have taken the investment world by storm. Interestingly, while they are known for their volatility, they also offer unique tax benefits, particularly when held long-term. For instance, cryptocurrencies held for over a year can qualify for long-term capital gains tax rates, which are generally lower than short-term rates. This little-known fact can make a substantial difference in your tax bill. However, the tax implications of cryptocurrencies can be complex. It's crucial to maintain thorough records and perhaps even consult with a tax professional to ensure compliance and optimize your tax position. Next, we have investments in collectibles and art, which might seem unconventional to some. These investment vehicles can appreciate significantly in value, and from a tax perspective, they are treated somewhat uniquely. In the United States, gains from the sale of art and collectibles held for more than 1 year are subject to a maximum long-term capital gains rate of 28%, which is higher than the rate for many other assets. Despite this, the potential for appreciation and the cultural and aesthetic value they offer can make them an attractive component of an investment portfolio for the right investor. Delving deeper into the domain of high-wealth individuals, private equity and venture capital stand out as promising avenues for alternative investments. These investments not only provide the opportunity to be involved with cutting-edge companies, but also come with potential tax benefits. Carried interest, for example, is a portion of an investment's profit that's allocated to the general partner. It's often taxed as a long-term capital gain rather than ordinary income, offering substantial tax savings. The tax strategies associated with these investments can be intricate and necessitate the guidance of knowledgeable advisors. Proactive tax planning becomes essential when navigating the world of alternative investments. It's not merely about identifying opportunities, but also strategically planning entry and exit from these investments to maximize tax advantages. A comprehensive evaluation of your overall financial situation and aligning your investment strategy with your tax strategy can lead to significant savings. With these investments, timing and the structuring of transactions hold considerable importance in minimizing tax burdens. Let's explore some real-world case studies to illustrate the successful application of these tax strategies. Consider a high-net-worth individual who, through a meticulously planned 1031 exchange, managed to defer a substantial amount of capital gains tax while concurrently increasing their real estate holdings. Or a tech-savvy investor who rode the wave of cryptocurrency appreciation, strategically capitalizing on long-term capital gains tax rates. These examples underscore the opportunity for transformative tax efficiencies through well-planned alternative investments. However, it is important to address common pitfalls and misconceptions around these investments. Many new investors fall prey to the notion that alternative investments are inherently risky, without realizing that, with proper due diligence and strategic planning, they can significantly enhance both returns and tax efficiency. Another common misconception is the overlooking of tax obligations associated with such investments, potentially resulting in hefty penalties or fines. In conclusion, alternative investments present a multifaceted opportunity beyond the traditional stock market, offering pathways towards both diversification and tax efficiency. Whether it's through real estate, cryptocurrencies, art, or private equity, recognizing and leveraging the unique tax advantages they offer can open the door to enhanced financial growth. I hope today's conversation has demystified some of the complexities surrounding alternative investments and inspired you to explore these avenues with confidence and strategic intent. Remember, as with any investment, aligning them with your broader financial and tax planning goals is crucial. Thank you for joining me today on Tax Smarts Unlocked. I hope you've gained valuable insights that will empower you to make informed decisions about your investment and tax strategies. We strive to bring both professionalism and a touch of humor to make the subject of taxes more approachable and less daunting. As always, our goal is to equip you with actionable strategies that not only alleviate tax burdens, but also enhance financial prosperity. Don't forget to subscribe for more episodes packed with insights and strategies to unlock your financial potential. Until next time, keep those tax smarts sharp and your investments diversified. Goodbye.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.